We've got some fresh new young talent doing some things that I know you haven't heard before.
1, 2, 3, listen.
Welcome to Finances, your home for all things financial, investment, money and lifestyle. Hosted and curated by the very talented team of certified financial planners, Burke, Britton Financial Partners. This is the Finances podcast. Our guest today, last guest for the year actually. Ooh. So hopefully there might be a bit of a Christmas theme here, but Pip Stork or Philippa, what do you want me to call you?
Pip's fine.
Pip's fine.
Yep. From
Millennial Finance Group. Pip's a commercial business broker, a business banking broker. Is that the best way to describe you, Pip?
Yeah, commercial finance broker. I'm still working out the terminology. So yeah, I suppose when people think broking, they probably think mortgage broking, home loans and that type of thing, whereas my background is in business banking. Okay. So yeah, commercial clients.
Yeah. So before we get into all things business broking and what you're doing at the moment, who was the first person ever to call you Pip? Was Pip your parents or was Pip just something you picked up at school? Where was it?
I reckon it must have been school. I couldn't even tell you. As a kid, I think I was called Blossom. My grandma used to call me Blossom and I have no idea where that came from.
Was that just a nickname?
Yeah.
Like sweetheart or? Yeah,
maybe. Sort of an term of endearment.
Yeah.
And then I think maybe when I started school, I went from a local primary school, Lockwood Primary School in Bendigo, to Girton. And I think maybe when I went to Girton, generally nicknames were your last name, but my last name being Stork, I wasn't really keen on being called Storky or anything like that. So I'm much happier with Pip. Yeah, so I'd say it was probably then that sort of kicked in.
Okay. And then your parents call you Pip or do your family call you Pip?
Yeah, most people call me Pip unless, when I was in trouble, I was generally Philippa, or teachers at school calling me Philippa.
Yeah.
I used to have a boss that used to call me Philippa and I always used to cringe because, you just feel like you're sort of being called into the principal's office and it wasn't like that at all, but it's just, Pip's much more casual. Yeah, and I much prefer it.
Yeah, it's funny when I introduced you to Peter before, sometimes I call him PB.
Yeah.
So we abbreviate all the names in here, runs DS and PB and JB. On Dad, occasionally I'll call him if I'm being formal or introducing him to someone as Peter. But it's interesting the names that you sort of absorb over time. Obviously I get Burke. That's pretty.
It's a good last name though. That's what I mean. Storky. No one wants to be called Storky or Stalker. Go on.
That's a good one. I won't call you that.
No.
Now, you touched on where you went to school. Let's go back to where you grew up, and we'll fast forward over the early bit to where we are today. But where did you go to? You mentioned primary school.
Yep.
What was your early childhood like?
So I grew up in Bendigo.
Yep.
We grew up on 20 acres in a place called Morong, which is just outside of Bendigo. We had horses growing up, and I went to a little country primary school, Lockwood. I reckon when I left, there was probably 100 kids at the school across, prep to grade 6. And then in year 6, I went across to the local private school and, basically did year 6 to year 11 or year 10, at the private school. And then went across to Bendigo Senior. So in Bendigo, rather than the high schools all going to year 12, they all go to year 10.
Okay.
And then everyone for year 11 and 12 goes into this effectively like a super school. I think there was 2,500 kids there when I started.
Is that a private or a public
Public school?
Yep.
Yeah, but I decided to go across from Girton to Bendigo Senior.
Yeah. And so when you were going through school, and you mentioned, I think you mentioned before, maybe off air, about growing up in the country and horses and things like that. You've ended up in banking, which we'll get to, but what you thought as a kid, like what were you thinking that you wanted to do? Did you have any idea what you wanted to do growing up in the country? Did you want to be a farmer or?
No, and we were pretend farmers. You can't make any money off 20 acres and you certainly don't make any money off horses. And so I probably in my earlier years wanted to be a surveyor or, do something like that, be outdoors.
Yeah.
And then as I progressed through school, quickly realised that unfortunately you have to do physics and a lot of science-based subjects. And
soil
that was
testing
just not, and that was just not my bag. I think it was something like, for a fraction of light or something in physics. And I just went, no, my mind's just blown, can't comprehend that. So that's not my bag. But I always loved maths. And so when I got to Bendigo Senior, I had a teacher who doing accounting.
Okay.
And I just loved it.
Was this business management or was it
in math? It was pure accounting. Okay. The subject was, VCA accounting.
Yep.
And
you liked it?
I loved it.
What's wrong with you?
I have no idea. And so I went, all right, I want to be an accountant. That's what I thought I wanted to be when I finished up school. And so, got into uni. got into Deakin.
Did you go straight to uni?
I did, yeah.
Okay, so no gap year.
No gap year, straight in. I was probably lucky to get into uni, if I'm honest. I really struggled. I think going from a private school where it's very structured, there are really no free periods. You know, if you were on a free period, you were studying.
Yeah.
Then I went to Bendigo Senior and there was all this flexibility, for want of a better word. There was no uniform. There's just very little structure. So I think the fact that I got into uni, I was very, very fortunate. But I did. I got into Deakin and...
At that point, did we think, I'm going to be an accountant?
Yeah,
Okay.
100%. So we had a house that we'd rented, my partner and I. I'm still with him. And it was near the uni in Bendigo. And so in my head, I was getting into La Trobe. I would just stay, you know, it was close to the uni. I could probably walk, go and do my accounting degree and then go and work for a local accounting firm like my mum had. And my mum worked for an accounting firm in administration for a while. And so I went, I'll leverage those relationships that I have, get a job as an accountant, and that'll be my life. And then, came to Geelong. So made the decision to come to Geelong.
The big city,
which it was. I still remember coming down here. I had a little Suzuki Swift and I packed that car to the roof with everything that I owned, which wasn't a lot.
Not much.
And I came down and I'd never driven on a highway that had 3 lanes.
Wow.
Yeah. And I'd never encountered traffic before. And I just remember thinking, how many traffic lights are there? I think it was just before the ring road had opened. And so we lived in Grovedale. And so every time I'd come from Bendigo, having to go all the way down La Trobe Terrace, out onto the Surf Coast Highway. And it was just light after light after light. So it was like little girl gone to the big city.
So what year was that?
2007, I moved down here. And
Had you ever been to Geelong before or not?
We used to come down here as a kid, like for holidays. So we go to Ocean Grove or Point Road night. My mum actually went to school here. She went to Morongo Girls' School.
Which was up on the hill?
Which is Cardinia.
Okay, where my kids go now.
Yeah.
Okay.
So, and obviously that was a while ago. So we did have quite a connection to Geelong. And my mum was always very big on you should move out of the place that you grew up in to see what else is out there. Even if you come back, it's really important to go and see something else other than just quote unquote home.
Yeah.
Yeah. So I moved down here. I left my boyfriend at the time, who's now my fiance.
You left him back in Bendigo?
Yes.
Oh dear.
Well, I didn't see it as being, you know, you're young and it was just an interim. I was just going to be gone for 3 years and I'd come back every weekend. And
what do they say? If you love someone, set them free.
It was in hindsight, it was very, very selfish. But I think at that age, you are and you don't. I was never really. I just didn't see it as a long-term thing. I really did just think, this will just be a few years. I'll get my degree done and then I'll come back home. And then, moved down here, started doing uni. And again, terrible at studying, just useless when it comes to actually without any, directive of you must go to class. And I was still working in Bendigo. So I worked in a pub when I first moved to Geelong. Yep. So I was commuting back, finishing my lectures at, say, 3 o'clock on a Friday afternoon out at Warm Ponds. And then jumping in the car, driving back to Bendigo for my shift at 6 o'clock at the pub, working 6 until close on Friday, getting up on Saturday, working, 12 until 9 or whatever it was, like the lunchtime shift or the night shift, going out with my friends or my partner on Saturday night, getting up on Sunday, working 10:30 till 3, and then coming home on the Sunday afternoon.
Yeah.
So I did that for about 6 months and then went, I need a change. I need to do something else. What job can I do where I don't have to work nights, first of all? So
you're doing the travel up there to Bendigo. That's very, very inefficient use of your time.
Oh, absolutely. And, so I sort of thought, all right, what can I do where I don't have to work nights and what jobs, are not too – I don't have to work too hard. I'm at uni, I don't want to have to do too much. Banks are never open, certainly not open on weekends. Don't open until 10 o'clock. I could get a part-time job as a teller in a bank. And so back then, 2007, I think I might have only had internet at uni. I don't think I had it at home. And so I'd printed off my resume.
Well, iPhones didn't exist.
They might have existed soon after that, but I printed off my resume, walked along the street in Belmont because all the
High Street in
Belmont because all the banks are there, and no one would take my resume. They all wanted me to submit it online. And the only place that would take my resume physically was the Bendigo Bank. And so they said, if you go into the head office in Geelong, they'll take your resume there. Beautiful. So that's what I did. And I got an interview. I still remember the interview. I was absolutely so scared, so scared of, sitting down with Mel Pearce, who was the regional or the operations manager at the time. And I thought I absolutely bombed the interview. And it's funny because I still remember when I got the phone call telling me that I got the job, I was sitting in the car park of the Bendigo post office when I got the phone call telling me I got the job at Bendigo Bank, and now I work above the Bendigo post office in my new role. So it's funny how things come full circle.
Yeah, or even the synergy or the serendipitous nature of getting a job at Bendigo. Mm-hmm. It's funny what you say about the banks not wanting to accept your physical resume. Maybe that was the early indication of the bank's just not wanting people to go into the branch.
100%.
Yeah. Yet Bendigo probably was still the community bank, encouraging people to come in.
Yeah. So that's how I ended up at Bendigo. So my first job, I was a teller out at Torquay, which was fantastic.
Did you have any idea? Did you know what you were doing or not?
No. I had no idea.
So what was a day in the life of a teller at Bendigo Bank?
So, Torquay was very low-key. Back in those days, I think Corio, which from a transactional perspective, it all used to be based off transactions because obviously cash was still more frequent. But I think, you could do 200 transactions on a really busy day at Corio. I don't think I ever broke 100 at Torquay. So it was much more, the demographic was different. So, you're dealing with a lot more people, retirees, so term deposit rollovers and things like that. But even just, learning to deal, I think I was 19 at the time, 18 or 19 at the time, when you're dealing with money, like large sums of money. I'd obviously dealt with cash before working in a pub, but it was just far different. And I felt this overwhelming responsibility that I was going to give someone too much money, which I did once.
You did? Did you tell anyone?
I did. Well, you get checked throughout the day. So I gave someone $1,500 too much for one day. And thankfully they were super honest and came back and gave us the money back. So, but I was there for a few months. Then I came into Belmont, worked at the Belmont branch. And then I did a stint on relief, which is basically if someone's called in sick, they used to have a relief team. I don't think they do that these days because it's a bit different.
So did you get a call in the morning to say, hey, can you come in?
Can you come in? Yep. Someone's called in sick. We need you at this particular branch. And I was out at Ocean Grove one day, sitting at the table, having my lunch, and I had my accounting textbook on the table. And this lady came into the tea room, gorgeous, Melissa Shergwin, and she said, oh, what are you studying at uni? I said, oh, commerce. She goes, oh, have you ever thought about business banking? I'm like, I don't even know what business banking is. What is business banking? And, she sort of gave me a rundown. We lend business clients money. And that was my first introduction to, I suppose, a career in banking because I had never thought of the bank other than, again, a stopgap. I'm just doing this while I'm at uni. And then I, heard about this thing, business banking. She said, you need to ring the senior banker in Geelong, have a conversation with him. Who was it? Leon Charnock.
Okay.
And he will tell you, I badgered him for quite a while.
So you would have been, you're 21 at this point?
No? I reckon I was 19 or 20.
Okay, so it was very much in the early days of your uni. Yeah, it was the
first 12 months I'd been in Geelong. I think I joined the bank in July 2007. And I joined business banking June 2008.
Okay.
And I think I was badgering Leon for quite a few months.
So who was it that saw you with your accounting book?
Mel Shergwin.
So what did Mel, if you ask Mel what was it other than seeing you pretend to read an accounting book, what was it that she saw in you that thought you'd be suitable for business banking?
I have no idea.
Okay. I'm really, Mel that.
Yeah, I know. And I don't know whether I've actually ever told Mel that, she was the one that got me into it, but she was really young at the time as well. And so for me, that was really appealing, young, blonde woman, forging a career. And I just thought, that's something that I'm interested in. Yeah, that's appealing to me. It was somebody who I could look up to. Yeah, so June 2008, I finally got into business banking after trying I think I had 2 interviews, and the second time I ended up getting the gig because I think someone pulled out. I think I was quite lucky. Yeah. And then really it's just been, from there, June 2008. So it was just prior to everything really kicking off with GFC. It was a very turbulent time. So in
hindsight, was that a good or a bad thing for you, maybe starting in that baptism of fire?
I think it was really good.
So credit markets just froze up?
Correct. And I think we were sheltered to an extent in Australia, but, I still remember phone calls with clients being quite distressed, things like temporary overdrafts, which, you know, in the later years of my career have been less and less, but, you know, clients going like, we've had a client fall over, like, we need money. Yeah, I think it was really interesting. I wish I was probably a little bit more advanced in my career going into that, but I've still had that experience, and I do think that it was very valuable to have that in your early years of your career, and working with such experienced people as well. Like the guys that I worked with early on in my career, in their 60s, 20-year veteran, or, you know, been bankers for 20 years, and just that depth of experience that used to exist, which today there's just not that depth of experience in banking anymore, which I think is really disappointing. But I think that's everywhere. I think if you talk to accountants, they would say the same thing.
Financial advisors.
We've moved into an era where you just don't have that depth anymore in any sort of career.
What do you think that is? What's the contributing factors to that, the loss of experience? Is it technology that's sort of taking away under the guise of efficiency, removing the need or the believed benefit of relationships and people? Or what do you think it is?
I really don't. Look, I think I can only speak, I suppose, to banking. I think, the progression of technology is one thing. The pace of change in banking is just phenomenal. I'm young. I've lived my entire career with changes. You know, we talk about me starting uni and then were no iPhones. You know, my entire working career has been based around change. And, our generation find it challenging. I can't imagine what it must be where, you know, you've spent the first 25 years of your career where things were ticking along, you know, and not changing that much, to then just be thrown into this thing and you just go, I'm out. I don't want to deal with that. That's just not. And it being so different from how things were.
I think you're probably right that the rate of change, again, it's a debate about whether there's always been change, but I definitely feel that the rate of change it felt almost exponential, even month by month at the moment with AI.
100%.
That has been enormous. And for the longest time, I mean, in the financial planning world, I mean, there's been an exodus of about 60% of the advisors in Australia have gone. A lot of those have been those with a lot of long-term experience and tenure, and they've got to the point where they've said, well, this is me out. I can't adjust to the changes in the environment in that market. So on one hand, that's a negative, but I think for every sort of crisis that exists, there's opportunity for those that are happy to pick up the slack and say, well, there's a need. It's like in business banking, like in financial planning, like in accounting, that need will exist. It's about how you actually position yourself to be ready to accept that change.
Yeah. And your industry would be very similar to banking on the compliance piece. And I think too, for a lot of people, and I even felt myself that used to frustrate me working for a bank, was the box ticking that took so much time. And I do understand the reasons behind it. You know, both industries have been plagued by, you know, we had the Royal Commission and, you know, there have been some really unethical things that have come out of that. But when you yourself know that your values and the way that you conduct yourself is ethical, and then you're still having to do this and it's taking so much of your time and taking so much away from what you actually enjoy doing, which is the client side and providing relationship and guidance and all of that stuff, that was very frustrating.
Yeah, it feels like it's almost like a pendulum, that there's been a sort of an overswing, an overcompensation for compliance, and a lot of industries have accommodated for the lowest common denominator. And one of the things I've noticed, and I've talked about this a little bit on the podcast with some of the other advisors, and even in other areas, even like the legal and accounting fraternity, it actually feels like the pendulum's coming back the other way. And I think one of the benefits of maybe having an exodus of a number in the financial planning space, an exit of a number of advisors, is that those people who don't want to be here are gone. So those people that maybe the compliance was too difficult are gone, so that I shouldn't say the cowboys or the dead wood is been removed.
Yeah.
And then those people that remain are okay with compliance. It's kind of hygiene factor in what they do. But I think we're seeing the re-emergence of like genuine professional judgment and the ability to have people that are skilled, have tenure, and can make decisions and get deals or business completed for clients, which is what the end consumer wants. They've got a need and they want that fulfilled. They're not too concerned about all the guff in the middle. But they need some money. They're about to buy a business. They need that resolved. They don't need you to tell them a long story about all the compliance and boxes you need to tick. They just need it done.
Correct.
Yeah.
Absolutely.
So the baptism of fire in 2007, 2008, fast forward, well, it was then 17 years, is that right? 17 years at Bendigo Bank? 16 years?
Yep.
When did you finish up with Bendigo Bank?
I finished up in May. I think it was the 31st of May this year. So it was a huge decision to leave somewhere that I'd been for my entire adult career.
And by that time, I mean, you've got seniority there too. I mean, you're one of the most senior people in business banking at Bendigo, yes?
Well, not one of the most senior, definitely not. But you do build an internal reputation. And yeah, it was really tough because I did see, early on in my career, I probably had aspirations for senior leadership. And as I went on in my career, especially in my late 20s, I really felt a pressure around making a decision. So I was obviously managing clients and doing the sales side of things in that respect. And I loved that. That is also very, very challenging in a bank. And then I was looking for opportunities to go into leadership roles.
So what was the challenging part of that when you say it was challenging?
You're just constantly up against never having enough time to be able to deliver.
Sure.
So it was nothing for me to sit there and have something, you get a deal from a client and all of a sudden 2 weeks have gone by and you just think, where did those 2 weeks go? And yet you've been paddling underwater, just constantly. And so I really felt that pressure. I put a lot of pressure on myself to deliver in a certain time frame, and it's really challenging in a bank to often do that. There's always more work than there are people on the ground, and that goes for all banks. And, that just really got to me. I wanted to be able to turn things around in a certain time for clients. And, if you couldn't do that or you didn't meet those expectations, that used to really get to me. So I sort of started thinking, okay, what else do I want to do? I have always had aspirations for leadership. And so I looked for those. So the last couple of years that I worked for the bank, I was managing what was called the associate pool. So the bank went to a model where rather than each banker having a one-on-one support, we pooled those resources together so that we could basically leverage. It meant that no one was ever by themselves.
So you essentially had an associate with you in...
I had a team of 7, I think, associates or 10 associates. I should know that off the top of my head. It hasn't been that long. Yeah, and basically the bankers would send their work in and we would manage that workflow across a team.
Okay.
And it was great. As a banker, you have one offsider that you're responsible for. And then this gave me the opportunity to step into a leadership role where I was responsible for, the career paths of young staff that either wanted to be bankers themselves or wanted to go into other departments within the bank. And that was fantastic. I really enjoyed that. But at the same time, I really missed the customer piece. Mm. And so that, I think, for me was the catalyst to going out and becoming a broker, which I probably hadn't thought about much. So to give you a backstory, the Millennial Finance, Jace Leatham and Jacob Heavyside are the 2 directors. And a couple of years ago, we'd had a sit down and a chat about me potentially joining them. But the timing just wasn't right at that point for me. I had this opportunity to step into this leadership role. And I sort of said to them, I am tempted, but I want to take on this opportunity within the bank. And then, in the last few months of last year, I started looking at, all right, what do I want to do? And this thing of, I really want to go back to being customer facing. And it was a bit of an adjustment psychologically for me, because when you're in a corporate organisation and you are looking at progression and climbing the ladder, that thing of, but are you going backwards?
Yeah.
And that was the thing for me where I had to actually flip what I was saying to myself internally and go, well, what do you actually enjoy doing? And if I don't enjoy that part, and senior leadership is more than just managing people, leading people. There's a lot that goes into it, and I just couldn't find the passion in it for me. Yeah. I just really enjoy helping people. I just really enjoy helping clients. I love going out and meeting people and hearing about their businesses, the number of business owners that you meet, and you just think, I didn't even know that this product existed or this service existed or there was a need for this. That's what fires me up. That's what I'm passionate about. And why should I be discounting that because I think I should be going down this route because that's where I've started going.
Did you ever do personality profiling? Do you do like a Prova personality profile?
Yes. Yep. I can't remember. I think I did one of those. Is it Gallup?
There's a few.
There's a few, yeah. And relationship was always one of them.
Top of the tree, I'd say, for you. Yeah. People, person, relationship driven.
Yeah. And so I think, you get to your point. I think that's a great thing about being in your 30s is that, and everyone's always said that, your 20s, you're sort of battling with this, where do I want to go? What do I want to do? And in my 30s, I feel like I've been able to embrace actually what I want to do, what I truly want to do versus what I think I should be doing.
I remember when we had lunch a month or so ago talking about our 20s when, have all this kind of existential angst. What am I doing? What's this all about? Where should I be? You've got comparison, you're comparing yourself against everyone else and maybe they're doing a bit better than I am. Should I be doing something different? And I found the same, in my 30s, it was probably the most comfortable I was ever in my own skin and thought, well, and again, not that comparison doesn't still exist and it's always you're always striving to be better, but once you find out what you're comfortable with and you play to your strengths, I think that's when you really find your groove. Yeah. And by the sounds of it, you've found your groove with Millennial. So on Millennial with Jace and Jacob, is that right? Yep. So tell us a little bit about their backstory. And I suppose one of the other questions which I asked you over lunch, because most small business owners or any business owner that's listening to this, if they're anything like me, I always thought about business banking as, you had a business banking relationship with the bank and that was it. And you could pick up, and it was painful to pick up and maybe go and create another relationship with another bank, and there's many reasons why you might pick up and move. But tell us a little bit about the business banking brokerage market and also about Millennial and how they came about.
Yeah, so Jace and Jacob, both ex-bankers. They were at NAB together. Yep. And they went out, I think it was 2020. They started the business, just the two of them. And obviously mid-COVID.
Yeah, great
they
timing.
Went through COVID. Yeah, it may have been just before COVID actually, I think. But then, COVID hit, but they've just gone from strength to strength. And honestly, when they approached me 2 years ago, I was very, very tempted. And since then, they've grown the teams. It was just the two of them to begin with. Then they hired a home loan broker, Sam, who is Jacob's brother. And then that team now, so we've got three parts to the business. We've got the home loan broker team, and that's got 3 home loan brokers and an associate in there. Then we've got the commercial team, which is myself, Brad Eaton, who's come across from NAB as well, who's 12 years, banker of 12 years. And then the ag side, which is the 3 directors. So we've got Jacob and Jace, who are Millennial Finance, but the ag side has a 3rd director in there, Lloyd Nielsen. And so their sole focus is just ag clients and financing for those particular businesses. So I think it's 70% of home loans are written through brokers now, and it's far less in the business space. But the thing that has really struck me coming across is that the number of deals that I used to come across as a banker where you just went, this is a great business, I can see the potential, but I just can't get it to work. Unfortunately, I'm going to have to pass. As a broker, you've got so much more opportunity. So people, yes, historically have gone to their bank and then they, I suppose, take what their bank says as gospel. And it's not necessarily the deal can't be done. So there are some deals that you can't do. I'm not a magician. I can't, if it really doesn't work, it doesn't work. But, different banks have different ways of looking at things. And so it's amazing how you can go to a bank, they can work it through their models, or, you can structure it in a particular way, or just the provision of information that they're happy to accept changes whether or not the deal can be done. And so that's I suppose the advantage that we have. The other advantage that we have is that, if you've been a business client of a bank for a long period of time and you're not testing the market, you're potentially sitting at a higher rate than you could, especially if you're a strong client. Whereas, any bank in town could potentially put an offer forward that would be more competitive. And so that's where we can come in as well, to sort of leverage that competitive market and go, hey, we can get you a better deal.
Yeah. And thinking about the sort of broking world in home loans, the similar thing exists in sort of the insurance world as well.
Yeah.
And I mean, every businesses, whether it be an insurer, whether it be a bank, have a different appetite for risk. The challenging thing as the end consumer is it's a little bit like comparing anything, whether it be an insurance policy, your private health care. The world is enormous. Like how do you actually disseminate all that information? And our role as financial advisors and mortgage brokers, and I'm assuming the same would be with you, is to say, here's what potentially is a very complicated scenario or complicated options. Let me simplify it for you and let me do that groundwork to actually come back to you with a solution. In terms of, so again, for the uninitiated, let's simplify a little bit more business banking and the types of clients, the types of deals that might actually land in Pip's lap to put together some sort of a proposal. Who are they? Who are the types of clients that are coming to you for finance?
Yeah. So generally, anyone with a business lending requirement, we would operate more in the preferably in the over $1 million commercial space, but anything over $500,000 you can potentially look at. Below that, I suppose the direct model is probably more appropriate, I think. So over $500,000 in business lending, and anything from commercial property to self-managed super funds, clients looking to fund their working capital through their business, asset finance, so buying trucks, buses, wheeled, harvesters. The guys do a lot in that ag space, obviously. Yeah, if you've got a business and you need finance and it's business in nature, then that's where we come in. And we we work with clients' advisors, so their accountants or their financial planners or whoever it is, to work on putting the deal together. So what does that look like? What is the need that they've got? What does the finance look like? What sort of term do they want to stretch this finance over? Are they financing something that, really they need to stretch over a longer term because it's a longer term asset? Or, do we need to be looking at shorter term funding because, for tenure or whatever? And we will put the deal together for the bank. So by the time it gets to the bank, they've got something that looks pretty much like they can just tie it up in a bow, put it into their systems. And so that's the thing. So from a banker's perspective, I'm not just sending through a set of financials and a phone number and saying, hey, do this deal or look at this deal for me. I'm actually pulling it apart and presenting what I think the deal should look like. And then it's about a negotiation depending on, which bank and how they view it and things. But yeah, it's a full process, and it gives the client the best opportunity of securing finance, and it also gives them the best opportunity of securing a competitive price. Yeah,
it's interesting when you said about interest rate, and sometimes with lending, sometimes that's people's only consideration. Yeah. Like they think just going to find a better rate, which is obviously super important, particularly in the current environment where people are feeling that interest rate pressure. But I think one of the areas that I believe adds the most value is, as you said, having people that collaborate to actually put together the structure of a deal. Yep. It's a very unheralded, unless you've gone through the process before and you've had some complexity where you need some people with experience to put together the deal, you realize it's not just about the interest rate. No. It's about the structure, the ownership, repayment period. There's a whole manner of things. And in a lot of instances, those conversations, they require, whether it be the business, their accountant, their financial advisor, maybe their solicitor, yep, maybe their broker, yep, to actually collaborate. And I think that we're talking before about the change in our industries, whether it be banking or financial planning. I think as the world of experience has shrunk in those areas, I think what I've seen is the famine mentality that previously existed, where people were really protective of their own patch of dirt, and they go, well, I don't want to actually talk to Jay about this because he might steal my client. It's flipped totally 180 degrees the other way, and we're saying, no, actually we need to collaborate. Yeah. Like there's an enormous universe of clients out there that have funding needs and financial planning needs and broking needs and accounting needs and legal needs. The universe and the market for our services is there like it's never been before. And so when you flip that 180 degrees and you say, actually, if you can collaborate with all of those people that surround a client, you actually end up with a much better deal. And that's, I think, where there's a lot of value other than just, hunting for just the best rate.
Correct. Yeah. And the rate piece is interesting as well. And I do talk about rate because, you know, one of our things as brokers is to make sure that we're getting the most competitive thing as well. But the other thing that, this is especially prevalent in the business market, is that banks will price for risk. So if you have something that is vanilla, and by that I mean you've got security, you've got a long-term business, your cash flow is really strong, you know, you've got no marks on your credit history, any bank will do that deal. And so where we come in for that is we purely drive best bang for buck, so best price for that deal. Where we can also add value is for clients where there might be some hairs, but the thing that people need to understand is if there are things that outside, so either security is a little bit light, or maybe, you know, credit history is a very challenging one. It's probably an area that is the most challenging, but you know, things like tax arrears is a big one. Banks hate it. And if you get a bank where, you know, you've got a client with tax arrears, you really need to flesh that out, the reason why there's tax arrears, you know, how they're addressing it moving forward, because when you get behind, it's very hard. But there are situations where clients have gotten themselves into a situation, and if you can justify that and explain that, but on the client side, you then need to be accepting that you may have a bit of a rate differential in that, because
they're
that
going to accept
adds
some more risk.
Correct. You know, and so there are lenders out there that you look at a headline rate that they might provide you and go, I'm not paying that. That's ridiculous. But you're in a different market. And so it's about looking at, okay, well, what's the investment opportunity? What's the return I'm going to get on this investment? And is paying this interest rate going to actually get me what I want, get my foot in the door, whether it's buying a business or whatever it is, or buying a piece of equipment? And is the return I'm going to make on that piece of equipment worth the interest rate? Yes, it is. Okay, well, it's still a good decision. And that then becomes a conversation with the accountants and things like that. I love the little disclaimer that you have at the end of this podcast, by the way.
The sped up one.
Don't be a moron.
I don't know whether anyone listens that far, but
I did. I loved that. I thought that was...
I was trying to make that... I actually read that at normal speed the first time, and I said, that's the most boring disclaimer of all time. And Luke Massey, who does our podcast editing, he said, mate, I think you should do like a translation of, you know, that jargon. And so that's how it came out. And I said, you know, don't be a moron, actually talk to people. Don't just act on what some idiot says on a podcast, go and speak to someone, which I think it holds true. And it leads very much into that conversation of like going and seeking professional support. So if someone's out there and they're listening to this, you mentioned like some of the things that catch people out, like tax arrears.
Yeah.
What are some of the other things that catch people out? And what would you encourage people who are maybe considering either refinancing or they need some finance support for their business or any other areas that you've talked about? How can they prepare to be better organised when they actually come to see you?
Yeah.
Or do you say, no, just come and see me? Like,
look, yeah.
Or it depends.
I'm not gonna qualify and say you can't come and see me until no. But I think it's probably not so prevalent in this day and age. But you know, certain industries where historically there may have been don't know whether I'm going to get in trouble for saying this, but like a cash component.
So like nightclubs,
yeah, tradies.
Yep.
Historically, probably not so much in this day and age. But, you know, not running things through the book and then expecting to get finance. Like if you can't show on paper that, like, gone are the days where when I first came into banking, I remember being able to say, yeah, but the guy is, you know, we know he's wealthy. Yeah. Like we know he's got money.
Can't see it anywhere.
Can't see it anywhere. Got no idea where it is. But like salt of the earth guy, let's just give him the money. Gone. If you can't show it on paper, you won't get funding for whatever it is that you want to do. So, you know, being strategic about
how much income you show.
And I know that there's tax strategies out there and I fully appreciate that. But if you're wanting to lend money, and that doesn't mean, you know, banks will add back things like depreciation. You know, over the last few years, we've obviously had the instant asset write-off where people have been writing off big licks of equipment.
Yep.
That's not a problem. That gets added back. Banks understand that. But, you know, that there are other things where, you know, maybe you're deferring sales into the following year and you know, to bring your tax right down. And if you've got no ability to demonstrate, especially with rates being where they are, assessment rates now. So if a client is borrowing money at, I don't know, we'll use a round number, 7%, the banks are assessing it on 9 or 10%. So on $2 or $3 million, God forbid, $10 million, that's a lot of interest. And so, that assessment rate that is really catching out a lot of people.
Yeah. Yeah. That serviceability of, I think we've always, one of our mandated projection requirements, assumption is that interest rates are always 2% higher than your model. Like, respective, if we've got any debt in financial planning scenario, we always assume that it's 2% higher and see that the client's cash flow still can accommodate that. And that is news to a lot of people are saying, well, it's not 2% high. I know. And go back 3 years ago and you're saying, listen, very unlikely that we're going to have more than a 2% rise in rates. But it happens, and it does. And now it's catching people out. I think that assessment, that not only the credit assessment, but actually being able to have with them, what would I call it, like a detached perspective of someone's situation. As a business owner, you're in it every day, and you need something.
Yep.
But it's so helpful to have someone that can step back from your situation and look, and not only look at the current tactical need, but actually look forward at the strategy and say, hey, these are the things you've got to get sorted before we can get this deal done. And I'm assuming that you would have instances like that where someone comes to you and you might not be able to get that deal done, but you actually give them very, very valuable support and information to get them prepared for the point where they actually can get it across the line.
Yeah, absolutely. And, if you've got longer term objectives as well, and, you're looking to buy a commercial property, for instance, and you go, okay, I know I've had the scenario run. We're a bit tight this year, but I know next year we're going to be good. And then you go and buy a $150,000 Silverado.
Seen a few of them floating around at the moment.
That has a huge impact on your ability to afford. So just, little things like that. We'll give you the finance for the Silverado. That's fine. But it's about the overall plan. Like, what are you looking to do, and making sure that the purchase today, especially where it's short-term funding, isn't going to impact your longer-term goals of, getting that commercial property for your business or whatever it is. Yeah, so. Yeah,
I think, again, back to what I said earlier about having a collaboration. And, to me, this is kind of business planning 101. When you think about so many small businesses and even bigger businesses don't spend enough time thinking about what their long-term strategy or objective is. They're in the day-to-day grind every day, and a lot of business owners are wearing, and I'm one of them, where I wear multiple hats, wearing the people management HR hat as well as CEO hat as well as being client-facing, and you do need support. Do actually need some external support from time to time, and the more collaboration you get around that, I think the better result you actually can get. Any other tips and traps for people who are thinking about or needing finance? What other tips or traps would you give to our listeners?
Oh, look, they're probably some of the main ones. Every deal is different. I think that's probably what has kept me excited about business lending. Like, it's very rare that you pick up a deal for a client and you go, cut and paste carbon copy of the last one. The exception there's probably, commercial property purchases if in this day and age the rent covers the interest payments. But, most clients our role is problem solving. And so it's just about understanding the business and, what their needs are.
Yeah. Let's talk a little bit about how people can get a hold of you. So Millennial Finance Group, how can they get a hold of you, whether it be in the home loan space, the commercial lending space, or the ag space, or asset finance space? Where do they find you?
Yeah, so we've got a website, millennialfinancegroup.com.au, can't forget the group. All our phone numbers and email addresses on there with our photos, and it tells you who the home loan guys are, and then the directors and myself and Brad in the commercial space. So you can jump on there. You can get us on Facebook and Instagram, Millennial Finance Group as well. And obviously I'm on LinkedIn under Philippa /Pip Stork. I think it's got both.
Now, we didn't talk much about horses, Pip. We better finish on that. Can you finance racehorse or not?
Well, this is the thing. I haven't done it personally, but I do believe that there have been people who have financed via trade finance importing horses from overseas.
Okay.
So that's an interesting one. I'd love to do that. I think that'd be fantastic.
Yeah, I think there might be a market there for you. What's the weirdest thing you've seen financed over your many years? Is there anything that's, I suppose Bendigo was fairly It probably wasn't much out of the box.
No, probably pretty traditional. Probably the most exciting thing, I had like a $500,000 CNC machine.
A CNC machine?
Yeah, they're like a laser cutter, I think.
Oh, okay, yeah.
I think it did drill bits. It was huge. I couldn't wrap my head around the fact that it was $500,000 and all it did was basically, cut these drill bits out. That was probably the weirdest, but it's not really weird, is it?
Well, I think there's a lot of the businesses. I had friends and clients that are in the sort of sheet metal roofing business, and some of the equipment, like some of the equipment for even a small to medium business, you're talking $500,000 for a press or for a machine that just turns metal. It's pretty crazy. And, not everyone's lying around with $500,000 of free cash in their small business to finance things that potentially can improve their turnover and the value of their business. How's your horse riding going, Pip, since you've returned back to the country?
Good.
Are you spending much time with your horses or not so much?
Every day.
Yeah.
I didn't this morning because obviously I jumped in the car. So my mum lives with my partner and I. She's got a house on our property, and so she's looked after them this morning. But every morning, every night, feeding up, rugging, unrugging, hugging. And then I ride 4 times a week generally.
There's obviously different types of riding. What type of riding do you do?
I do dressage, and no one ever knows what that is.
Let me guess, is dressage where you actually make the horse prance or do tricks?
This is the thing. So
even
describe. No, you are 100% correct. But it's probably the one that everyone describes as the boring one in the Olympics, where they're not jumping, they're not running around the course. They're in a sand pit basically, and they're going around, and the horse is dancing on the sand. But the sad reality is that at my level, it doesn't look anything like that. No. I ride a lot of circles and a lot of straight lines, and that's about it. And it sounds horrible, but it's just, there's something very, wholesome about it. I just love it. I've gone from dancing. I danced while I was in Geelong. I did Irish dancing for
I think I remember.
years.
Were you on the Paco Festa?
Yes, I probably would have been.
Were you walking down Paco in
in the dresses and the wigs?
Yep.
Yeah.
So it was Irish dancing?
Irish dancing, yeah. So river dance for those who...
Do you still dance or not?
No, I don't. And you get to a point, it's very physically taxing on your body, dancing, and probably any sort of dancing, but especially Irish dancing. And so by the end, my back, I was just constantly in pain. And so retired when I moved back to Bendigo. But I think I said in the notes that I sent through, like, I just have to have a hobby. When I moved to Geelong, I remember saying to my partner, something's missing. He goes, what do you mean something's missing? I said, I don't know. I'm not sure. And it's this thing of I have to have something to do, and I'm all in. I won't just do something. So some people own horses to go for a nice leisurely ride in the forest on the weekend, and they just enjoy owning horses. And I just can't do that. I'm all in 4 days a week, competing, lessons every week. Yeah. I'm hyper competitive.
That sounds like my wife. If she's in, she's all in. She's either all in or all out. She's got no interest in it, or she's all in. She was doing learning to skip. So we used to skip at CrossFit when we used to go to CrossFit, and she decided she wanted to actually do skipping as part of her exercise routine. She just went deep, went way deep on all things skipping. There's 14 skipping ropes, different types of skipping ropes. Yeah, it's pretty cool. I think it's a pretty good quality to have, because you know that anything you're going to spend time on, you're actually going to get the most out of the time that you do.
Correct.
You do it.
And something like horses, where it's very expensive, and so
how many horses do you have?
We've got 3. I've got 2, and Mum's got 1. One of mine's retired, so I've just got 1 full-time horse. But that's enough. No more horses? Not for now, no.
Okay. Is there anything we haven't covered today, Pip, that you really wanted us to touch on, whether it be around Millennial or any listeners, any call to action to anyone listening out there, or anything around horses or dancing?
No, just I suppose, anyone wants to get in touch, they're more than welcome to reach out to me via mobile or email, and I'm happy to run scenarios for people as well if they've got questions around anything.
Beautiful. Well, thanks for coming on. I know we had a bit of a hiatus in between when we saw each other. We didn't touch on the fact that I think you mentioned you listened to Bridget Kelly's podcast, and Bridget.
I'm a bit of a fan of Bridget.
Yeah, she's a legend.
Yes.
So Bridget, yourself, and I were on the Geelong Young Professional Committee for a number of years, and I think that's where we originally crossed paths. So it's been great to reconnect.
Yes,
I'm excited for you in your new venture with Millennial, and thanks for coming on. I look forward to maybe.
Thank you for inviting me. It was great fun. I was very nervous, but it's been very enjoyable.
I think between you and I, we're pretty easy to have a conversation with. So, Pip, thanks very much for joining us, and I look forward to having you on another time.
Thanks, Jay.
Thanks, Pip. We hope you enjoyed today's episode. If you're keen to understand more about how financial advice could benefit you, follow us on Instagram, Facebook, and Twitter at Burke Britton FP, or Google Burke Britton Financial Partners. Check out our client reviews, testimonials, and make a time to meet one of our certified financial planners by clicking Book Now on our website. Thanks for listening.
Any information contained in this podcast is of a general nature only. No account was taken as to the objectives, financial situation, or needs of any particular person. Therefore, before making any decision, listeners should consider the appropriateness of any information with regard to their particular objective, financial situation, needs, and seek independent advice from a licensed professional specific to their circumstances.
All right, hit it.
That translates to don't be a moron and act on what some random person says on a podcast. Take personal responsibility. Do your homework. Ask questions and speak to an actual human that knows what they're talking about before you do anything. PB Financial Solutions Proprietary Limited, trading as Burke Britton Financial Partners, are authorised representatives of AMP Financial Planning Limited, AFS, licence number 232706.